This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Russia's exports of naphtha to Singapore on track to rise to their highest level this year in May as Russian refineries recover from drone attacks, traders and analysts estimated, with the trend poised to continue as more capacity comes online. Singapore imports of Russian naphtha, a key ingredient for making petrochemicals such as plastics and textile fibers, will rise to about 415,000 metric tons in May. LSEG Research estimated, while consultancy FGE expects nearly 500,000 tons. The refinery attack impact wanes off through May and June, which is why we may expect higher exports from Russia, said Arman Ashraf, global head of natural gas liquids at FGE.
China's imports of major commodities for April show the impact of price trends, with strength where prices were trending down and weakness where prices were moving higher. The temptation for market observers is to view China's commodity imports through the prism of how the world's second biggest economy is performing, but it increasingly appears that price movements are a more determining factor, at least in the short term. For April, there was strength in imports of iron ore, coal and natural gas, while arrivals of crude oil and copper were soft.
Moving on to the top news in the energy sector.
Chinese companies won 5 more bids to explore Iraqi oil and gas fields, Iraq's oil minister said on Sunday, as the Middle Eastern country's hydrocarbon exploration licensing round continued into its second day. Chinese companies have been the only foreign players to win bids so far, taking licenses covering 10 oil and gas fields since Saturday, while Iraqi Kurdish company Car Group took 2. The oil and gas licenses for 29 projects in total are mainly aimed at ramping up output for domestic use, with more than 20 companies pre-qualifying, including European, Chinese, Arab and Iraqi groups.
Oil prices extended declines on Monday amid signs of weak fuel demand and as comments from U.S. Federal Reserve officials dampened hopes of interest rate cuts, which could slow growth and crimp energy use in the world's biggest economy. Brent crude futures slid 7 cents, or 0.1%, to $82.72 a barrel by 0624 GMT, while U.S. West Texas Intermediate crude futures were at $78.21 a barrel, down 5 cents. Oil markets shrugged off the impact of the Middle East conflicts and shifted their attention to the world economic outlook again, Auckland-based independent analyst Tina Tang said. Next, we have the top news in metal markets. Iron ore futures prices held their ground on Monday, as weaker than expected credit data in top consumer China partially eclipsed support from the prospect of more bond issuance by the country's authorities to spur economic growth. The most traded September iron ore contract on China's Dalian Commodity Exchange was up 0.23% at 869 yuan, $120.13, a metric ton, as of 0241 GMT. The benchmark June iron ore on the Singapore Exchange was trading 0.22% lower at $115.55 a ton.
Gold prices inched down on Monday as investors awaited key U.S. inflation reports, which could shed more light on the timing of the Federal Reserve's first rate cut. Spot gold fell 0.2% at $2,354.77 per ounce by 0448 GMT. Prices hit a 2-week high in the previous session. U.S. gold futures fell 0.6% to $2,361. The U.S. Producer Price Index data is scheduled for release on Tuesday, followed by the Consumer Price Index on Wednesday.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures extended gains on Monday as the market tracked strength in rival oils at Dalian and Chicago Board of Trade, CBOT, while the market awaited the export data for further cues. The benchmark palm oil contract for July delivery on the Bursa Malaysia Derivatives Exchange increased 65 ringgit, or 1.71%, to 3,874 ringgit, $816.61, a metric ton during the midday break. Palm oil is tracking Dalian and CBOT while looking forward to the 15-day export data to provide further lead, a Kuala Lumpur-based trader told Reuters.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.